All right, what up, everybody? This is Jeremy with Escape Velocity Trading coming at you for another market bias update report for Sunday, June 8th. It is about 6 p.m. Futures have been open for about 3 hours now and up about 1%. Before we dive into the charts, reviewing last week's trading, looking at the trading journal here, I ended up making $10,207.50 over the course of 13 trades with 8 wins and 5 losses. Ended up doing a really good job keeping my losses small this week and ended up having a couple of significant gains, one of 6,700, one of 4,600, and then a few that were over 1,000, and then a couple just in and out real quick trades that I was only in a few minutes a piece. So with that, let's go out and look at the charts and see what we are going to be expecting for price action this coming week. Looking at S&P 500, I'm going to go ahead and put this out onto the weekly chart. Right now, we are looking at the daily chart. Obviously, had a really nice rebound and then have just been stuck in consolidation. And I've basically been saying anything underneath this breakout line was just noise, and anything above this breakout line was just noise. So as long as price stayed within this zone, I wasn't going to be strongly opinionated. We are starting to get some price formation above that breakout zone. Tested it a couple of times Thursday and Friday last week, ended up opening Wednesday, Thursday last week, and then Friday ended up opening and closing right at basically the exact same price, just barely above that line. Not much conviction, but it still is technically trying to move higher and did break out of that zone. So I'm more interested in the upside this week than the downside. If we toss this out to a weekly chart now and zoom in a little bit, you can see a little bit clearer to the bull side. Our 9 EMA, this green line here, has now pierced and crossed back above our shorter term 20 SMA and our longer term 50 SMA. So that is nice to get our moving averages stacked in a bullish fashion once again. Our MACD for the longer term weekly chart did cross over not only the signal line, but also back into bullish territory from the zero line. And our RSI is starting to creep higher and just barely poked its head out of the bearish territory below 50. It is now at about 51, so just barely in the bull zone. So looking back at the daily chart, I'm not expecting a huge move, but looking out to our previous all-time high, drawing our line out, I could see us moving up and testing that as long as nothing stupid comes out of the White House this week. Fingers crossed. Moving on to the Nasdaq. Nasdaq's going to be basically rinse and repeat the exact same thing. We have our two consolidation levels, one for our support and one for our upper resistance. We did end up breaking out above that on Wednesday and closed above it. Ended up Thursday closing back below it and having a little bit more fight from the bearish side. And then Friday, very, very similar to the S&P 500, this little doji candle right here, right above the breakout zone, just kind of hanging out. Not anything aggressive, not showing real strength, but it did end up closing outside of that zone. If we toss this to our weekly chart as well and take a look, it looks almost identical to the S&P 500 with the 9 EMA crossing above and our bullish moving averages. Going out to IWM. IWM's a little bit different, especially with the moving averages here. You can see that our 50-period moving average is still overhead and will likely act as resistance. It's currently at $215.13. So looking at that for a short-term target for any bullish weekly move that we have this week, that also correlates to the wick lows of several candles here back from previous consolidation and opening prices and closing prices here several times. So this 215 to 216 zone is really important to the market. If we drop that into a daily chart, we can actually see just barely above where that 50-period moving average weekly chart was. We do have a 200-period moving average. So I'm going to call that a zone this time from 215 to just over 216. I'm probably not super interested in playing the move here because that's really only about a 1.5% or so movement up to the lower end of that zone and about 1.8% up to the upper zone. So not a big enough move personally to probably entice me. I do like, however, on this chart, how we have broken above this longer term diagonal zone. So if we put this back onto the weekly chart, you can see on the weekly chart here, we did have a nice diagonal that ended up lining up perfectly with the cluster of all three of those weekly moving averages and looking to break back above the 50-period moving average on the weekly and the 200 on the daily. From there, I will be interested in playing a rip back up to the highs, but probably not while we're still underneath those resistance zones. Going out to the Dow Jones. Dow Jones didn't end up clearing its consolidation zone. We are still within the same pattern. Wicked up above on Friday, ended up closing back below it. So slight relative weakness in the Dow Jones versus the S&P and Nasdaq, and then IWM obviously as well. So going out to the weekly chart, looking at this, the weekly chart does clean it up a little bit. All three of our moving averages are really, really tightly clustered. The 9 has not crossed back above the 50 here, however, so again, kind of confirming the relative weakness for the Dow Jones versus the S&P and the Nasdaq. So I'm going to be ignoring the Dow Jones like I do most of the time this week and focusing on S&P and Nasdaq between these four. Going out to IBIT to track our Bitcoin price movements. So on this, we ended up actually having a little bit more of a pullback than I was expecting on IBIT, enough to get our short-term 9 EMA here in green to cross below our 20 SMA here. We do have a little bit of a bearish pattern, and I will be interested in playing this to the top side when we get a break of this diagonal resistance line coupled with a break back above and a close back above this 20 SMA right here at $60. So I'm going to go ahead and put an alert there. And then let's just double check ourselves out on the weekly chart, make sure there's nothing on the weekly chart in our way. And if we zoom in, we can see that we are clearly above all of our moving averages on the weekly chart and do have the 9 EMA creeping up underneath us to act potentially as a springboard. So if prices can get back above this level here, and I am going to call that 61.75, I will probably add to a position that I might initiate on the break of this shorter term daily diagonal and the 20 SMA. So for anyone that is not familiar with scaling into the positions, this is an important little tip or trick to increase your probability of success and your overall profit in the market, being able to scale in and scale out of positions. Right here, if we get the break above this diagonal and above the 20 SMA on the daily chart, that is confirmation on the daily time frame, and I do like that trade. But once price reclaims above this 61.75 level, that takes out the resistance levels on the weekly chart as well. And so we have traders on both time frames, longer term investors and shorter term swing traders, all looking at that as a bullish movement and kind of ramping up probably for the next run up to 67.5, 66, 68, somewhere right in there. And that would be a significant enough movement to really entice me to play that. So whenever you get different types of traders trading on different time frames, all seeing the same thing, whether it's bullish or bearish or neutral, that ends up giving you really good trading patterns. So on this, it's not quite ready to go yet, but I do expect that sometime this week, we are going to start seeing the next bullish movement. Going out to Ethereum. Ethereum on the daily chart doesn't look as good as Bitcoin. We ended up having this real tight consolidation here for a little while with a slight increasing low. And I'm going to draw that in right here. And we ended up actually breaking that low on Friday, which is not a great look. It didn't run and go anywhere, so I don't mind it as long as it comes back up on Monday and recovers those moving averages on Monday. I will kind of ignore that fake out breakdown. But if it does not reclaim on Monday, I'm going to be a little bit more wary of Ethereum going into the next week. Now, going out to our sector ETFs, let's go out and look at materials. Materials, we got a 200 period moving average just overhead at around $89. If we toss this out to a weekly chart, that also correlates almost perfectly with the 50 period moving average at $89.01 on the weekly chart. So I'm going to put a little alert right there. And we're going to go down, give it a couple of cents. I'm going to say 89.05. So if we get a breakout above 89.05 this coming week, that will probably be enough to entice me to get into the bullish stance on this position. We do have a little bit of resistance up here at $91, but once we pass that, it opens up for several points. So I am interested to see how this develops, and I'm going to put this on my watch list. Not 100% sure I'll trade it, but at least have it on the watch list and watch that area of the market. Now, going out to consumer discretionary, XLY. XLY doing basically the same thing that the major indexes have done over the last couple of weeks, and that is absolutely nothing. We have just stayed within this range. We didn't break down the lower side. We didn't break out to the top side. just stuck in the mud. If we take this out to a weekly chart, we can look at that and we are getting support from both the 20 SMA and the 9 EMA on the weekly chart. So if I had to be a betting man, which I am because I play the stock market for a living, I would say breaking out above about $218 right there on the top side is going to be my target. And if we get above that level, I want this alert to go off and signal to me that I need to check in on XLY. Going out to XLK. XLK, honestly, it's run back up to pretty much the all-time highs. We are just a couple of points below the all-time high there. Current price is 238 and 36 cents, and 243.14 is our all-time high. Looking at the weekly chart, it does look like it's continuing to build bullish momentum. The RSI does still have room to run on the daily, but I want to check that on, or excuse me, on the weekly. I want to check that on the daily chart. So if we go out to the daily, our RSI is actually still in bullish territory. Our MACD is still in bearish territory, although needs to cross back over the signal line. And this did technically break out on the top side on the daily chart here last week and closed with a doji above it. But again, just that small amount of space between current price and the all-time high, I will probably end up waiting for an actual breakout of all-time high here. So all-time high was 243 and 14 cents. I'm just going to call that 243.15. Put that in. So now I have an alert set, and on the weekly chart, once again, if we do break out and set a new all-time high, this will tell me, and then I will be able to trade accordingly. So definitely giving the nod to the bulls, but not quite ready for prime time, in my opinion. Going out to XLE. XLE is starting to get maybe a little interesting to me. It's been just kind of a choppy mess for quite some time here. And the thing that intrigues me about this is the RSI bouncing off the lower levels. The MACD is basically straight neutral. But we have three of our four moving averages, the 50, the 20, and the 9, all converging right on top of each other on the daily chart. And we have a bit of distance here, about 5.5%, to get back up to that 200 period moving average as overhead resistance. So there is a pocket here that might end up getting filled if we can get some momentum to the top side. Now, if we go out and look at our weekly chart, the 200 period moving average on daily is 88.30. So looking at 88.30 on here, and the 50 period moving average on here is 88.68. So I would want to get back above 88.68 probably. So I am going to put my alert right there. And if we do get back above that, now that I'm actually zoomed out and looking at the longer term chart, we would still be smack dab in the middle of a longer term support and resistance battle going on right here. So I'm not sure I'm going to have much interest in playing that other than potentially some day trades on the crude light futures, but probably not for swing trading this week. So I'm actually going to scrap that one for this week for swing trading. Going out to XLU. XLU, let me clear out all of our moving average studies here and drawings and whatnot. There we go. Clean up the chart a little, and I'm going to toss this to the weekly as well. And we can see on the weekly chart, we are butting up right against that all-time high. Underneath that, I'm not interested in anything, but if we do get above that weekly breakout line, I might be enticed to take a play. Typically, when you do break out to all-time highs, the nod is to the bulls statistically, and I like to play when I have a little bit of an edge. So I don't mind waiting and actually purchasing at a higher price and looking for that breakout, because with that higher price, it gives me a higher probability of success. So going out to XLP, this is consumer staples, and this is honestly fairly similar. We have a little bit of a gap here until that all-time high price, but not probably enough to warrant my wanting to pay much attention to it. If we drop this out to a daily chart and look at it, it's still just kind of stuck in the mud and bouncing around here, chopping back and forth. Not super interested in XLP. Going out to XLC. XLC basically looks identical to the S&P 500. Those two charts basically are spitting images of each other. If we toss this out to a weekly chart, we can see basically the RSI and the MACD look very similar as well. And we do have a little bit of space here, maybe a $1.50 or so until all-time high, but not enough to really entice me to front run anything. So I will probably let the movement go up until this point here. and then look for some kind of a bounce and then go and play that secondary break of that 105.58 level. So not quite ready for prime time yet. I'm not interested as is and probably needs one more week to solidify itself and give us a good tradable pattern. If this one rips without me, whatever. There are plenty of other areas in the market to trade. I'm not going to worry about it. But in my estimation, this is not quite ready yet. Going out to industrials, XLI. Tossing this one out to the weekly chart to see a little bit more. And this one actually did close on Friday, just barely breaking out of that all-time high. You can see the little high bubble here saying $145.56. Dyslexia coming right in hot. Was an all-time high price. It closed slightly below that level. So even though it did set a new high, it wicked back down below that on the weekly chart. I will be looking for a daily break above that line to signal that the bulls are in charge. So if we go back to our daily chart and look at that line, we want to see probably 1 day's movement above that line. If we can get good movement on that, I will probably be interested in playing that to the top side or looking at specific stocks within that sector. Going out to XLF, and again tossing this to a weekly time frame to see a little bit more action. This honestly has been whipsawing around quite a bit. I don't mind the look of this right now. If we zoom in a little bit, we do have the all-time high here and a slight diagonal that we could draw. A break above that, you might be able to entice me to front run. We'd have about 2.5% to get up to all-time high. And if we did break that all-time high, I would expect that we'd probably come up to that $55 level. So interested potentially in XLF, but instead of trading XLF specifically, I would probably go in and actually look at individual stocks in this area and see if there are any better patterns or higher probability setups within that sector. So I'm thinking Goldman Sachs, JP Morgan, Bank of America, Wells Fargo, Citibank, any of those large and well-known institutions. I'll be looking at charts of those for the financial sector instead of looking at XLF itself. Going out to XLV, healthcare. Healthcare underneath its 200 period moving average here on the weekly chart. I'm going to set an alert for myself in case it gets back above that level. Now, if we drop into the daily chart, we can see that we're starting to shape up here and have had a little bit of time now bouncing around on the support level and have not really been able to break and hold a sustained break at that 129 level. We do have the 50 period moving average here, and then again on the weekly chart, just above that, we have the 200 period moving average, so not quite ready for prime time in my estimation. I do think that we're in the early stages of recovery here. I doubt that we are going to see another leg down. If we do, the target should be down to this level right here around 122, but I'm guessing the likelihood of that is less than the likelihood that we are going to start pushing it back up above that 200 period moving average. So my nod is to the bulls, but probably needs another week or two to really shape up. If we get a break above that 136.60 level, I would be interested in playing that up to a T1 or target one of 140 to 141, and then a T2 up to 144. Going out to gold. Gold has just been chopping around, consolidating, nice little pennant formation here. Honestly, I think it still has a little bit longer to chill and go nowhere before it's actually going to do anything. If we break down below the 50 period moving average, which I'm going to set an alert at right now, I will be interested in more aggressively covering my long positions in gold stocks. If we do break out above this diagonal, I will probably buy back my call options here. So if you see this little bracket on the chart, the horizontal line here at, what is that, 317, 318, and the horizontal line, that's how I signal to myself that I have call options sold at that horizontal strike price, and this vertical line is the expiration date. So as long as the price stays below that horizontal line before my expiration date right here at 620, on the 20th of this month, if the price has stayed below that, I keep the premium from the stock that I sold or the option that I sold on the stock, and I keep the stock, which is kind of nice because it's basically like renting out your stock and collecting premium just like you would rent out a house and collect a rent payment. So nice little tip for anyone that knows options. You're well versed in covered calls. For anyone that's not, this is something that you should probably start looking into to learn how to do basic covered calls because why not rent out your stock when you start to see it go into a neutral setup and price is unlikely to move higher in the short term? Going out to silver. Going out to silver, let's drop this to a weekly chart. It had a banner week this last week, just blasted off. New high on the 3-week chart, not an all-time high though. If we toss this out to a max all-time high is way up here at $48, and that was after the recovery of the 2007-2008 crash, and silver just went on a monstrous tear, has never come close to that level ever since, but we are starting to see the shape up of potentially seeing another exponential run here in silver. We've cleared out almost all of our resistance lines. We do have a little bit of resistance here at about 34.20 and another one up here at about 36.50. Then the next one is way up here at about $43. So if this can sustain a little bit of momentum on the daily chart, especially if it gives us a nice little pullback into this support level and then blasts off, I will be really interested in playing. So if this gives us a candle like that, and then maybe a little doji, and then gives us an upward move from there, taking out the high of that last lower candle, I will be very interested in playing that for a swing or potentially a position style trade. Last but not least on the charts, let's go out to the US dollar. We are still holding our support zone here on the daily chart. If we toss this out to the weekly chart, we are well below our 200 period moving average in gray, which is not a great look. And we are actually below the lows of our old resistance and support zone here. So not a great look. I wouldn't be surprised if we fight and come back up and test that level again and see if we can break back above it. We are super oversold on the RSI, and our MACD is about to cross deep in bearish territory, which is actually a bullish contrarian signal that I like a lot. So if we look back in time, the last time that the MACD, the blue line here, was this far in bearish territory and it crossed over the yellow line here, the signal line, that ended up being a nice trade right here and then popping up that big week's movement after that cross. Right here again, we got another cross deep in bearish territory, and this one's even more pronounced. So we crossed right here, and that signaled basically this big candle, and then got a monster run on the US dollar from there after having a little double bottom kind of situation. And this pattern right here actually reminds me a little bit of a more condensed version of what we're going through right now. So if we do get a pop back up into the 101, 102 level, I might be interested in playing that and looking for an exaggerated move higher again. This is going to be highly, highly dependent on international relations and trade tariffs and all that kind of BS that's been going on, and just whatever Trump is doing in the White House. So I'm going to be paying attention to the news before I take any trade on the US dollar, but it is interesting to see that starting to shape up with the highly oversold RSI and then the MACD potentially crossing bullish again deep in bearish territory. So finally, let's wrap up and go out and look at our heat map and then look at our Forex factory calendar. So on the heat map, this is a 1-week performance. Looking at the last week's worth of trading, you can see consumer defensive was in the red. So money is coming out of defensive areas of the market and going back into more aggressive areas of the market like Nvidia, Avgo, other semiconductor stocks, communication services, consumer cyclical. So all of those had a great time except for Tesla. And Tesla is a black swan right now because Trump and Elon Musk are no longer friends, apparently. They were so buddy-buddy, and Trump was like, this is the best guy ever. I love him. He's best thing since sliced bread. Well, fast forward a couple of months. Now they are launching terrible threats and accusations and assaults on each other's character left and right. And it's just kind of hilarious to see the circus act that's going on between them. But that has just absolutely smashed Tesla's stock down almost 15% last week. And that pain probably isn't over yet. It will probably give a decent buying opportunity if it resolves soon. So keep an eye on Tesla for bottom fishing if you are interested in that area of the market. But my guess is probably not quite yet. Probably needs another week or two for that storyline to blow out a little bit. Finally, going out to the Forex Factory, looking at the week ahead, we have nothing on Monday and Tuesday of consequence. On Wednesday, we do have our CPI data, month over month and year over year. On Thursday, we have our PPI data, month over month, and unemployment claims. And then Friday, we do have consumer sentiment report and inflation expectations report. So I will be interested in watching the CPI and PPI. Less concerned about consumer sentiment. We've been hovering around that 52 level, but it will be interesting to see. But biggest news is going to be Wednesday and Thursday this week. So with that, guys, as always, trade safe. Let me know if you have any questions. Hit me up in the comments. Give me a like and share. Would really appreciate it. And I will catch you guys next week.